I'm going to carry on introducing the session. So as I said, we're talking all about startup forecasting, tools and processes, and we're really, really lucky to have Darren Glanville from Fathom, who really knows all about it. And I'm going to let him introduce himself and Fathom a bit more fully in a moment. Before we get there, I just wanted to remind you what we're doing here. This is a CFO Connect event. CFO Connect is the go-to community and resource hub for finance leaders in fast-growing companies. Really, finance leaders. That's who we're building this community for. That's who hopefully you are. If you're not, again, welcome. We're not exclusive. CFO Connect is a community powered by Spendesk. Very, very briefly, Spendesk, we are a spend management company. We make it much easier for you to manage all of your non-payroll spend. That's essentially what we do. That's all I'm going to say about it. If you haven't checked out Spendesk, please feel free. We'd love to get to know you a bit better. I also wanted to share CFO Yeah, which is your new favorite finance podcast. And it's essentially a finance podcast that works a little bit like these webinars. Only it's just audio. So we interview mainly CFOs, again, from fast-growing companies. We've had people, CFOs from Zapier and Notion and SoundCloud and all sorts of other wonderful CFOs. If any of them are here, I'm very sorry if I didn't name yours. So do just please check that out. It's everywhere you would look for a podcast, Spotify, Apple, or just click that link that my colleague Ellie just shared. That is it basically from me for a little while. And now I'm really excited to hand it over to Darren, who is first of all going to introduce himself, but then really get into the exciting topic of startup forecasting.
Yeah, I just want to say, hopefully you can hear me okay. Yeah, awesome. So thank you very much for inviting me along to talk to you this afternoon. I'm just going to share my screen, so just bear with me whilst I make sure that this is all okay. Sorry if we suddenly appear to be in a kaleidoscope effect for a few seconds, but hopefully you can see that. If we haven't spoken before, my name's Darren Glanville. I'm the UK country manager at Fathom. Please feel free to connect with me on Twitter and on LinkedIn. Exactly the same, just search for Daz Glanville on LinkedIn. I'd love to connect with you, share thoughts, ideas, debate all things software, forecasting, reporting and analysis. But I've been involved with Fathom now for just over a year. Prior to that, I spent 3 years in an accountancy practice as a director of operations. And prior to that, spent 20 years selling software to lots of accountants and advisors in how to them to move their businesses and their clients' businesses forward. So bienvenue, welcome to this afternoon's session. Before I start, I'd just really like to break the ice myself. So what I'd love to do is, if you can, cast your mind back over the last 2 years and think about what kind of 3 words you would use to describe the last 2 years. And I'll give you just a few seconds to do that. I always find the answers to these really interesting, and again, if someone could perhaps just share some of those with me, that would be really useful. Once you've done that and you've taken the time to put your 3 words in, I'd like you to project forward and think about what 3 words would you use to describe the next 18 months for yourself and your business. This isn't, as a disclaimer, put those in as well. I'd be interested to get some feedback on those. As a disclaimer, this isn't a forecasting boot camp. I'm certainly not here to talk you through the minutiae of doing that. But I do think it's important that we kind of frame, this and why it's important. And I think it's also important to look at this in a much more wider context. For those of you that are starting up a pre-seed or at the seed stage, I think it's vitally important that we execute on sound financial stewardship. And we understand the numbers as they're coming through. But I don't think it's just about forecasting. It's certainly, to me, and has never been with the clients that we work on today and the clients that I've worked on when I was in practice, just about setting budgets and forecasts and leaving them. And for many small businesses, it's a once-off exercise. And this is something I'm very passionate about, is working with small businesses and business owners in general, just to get them into a really good cadence of doing this on a regular basis, because we get much more opportunities for feedback loops coming through. So for any of you that are at that early stage, please, consider baking this into your processes on a regular basis, and having that regular cadence of reviewing your business plan, reviewing your budgets, reviewing your forecasts, because they can be extremely different. I've worked with lots and lots of small businesses over the years that haven't had an opportunity to even think about budgets. They've just got so caught up in the day-to-day treadmill. And I've never yet met a business owner that I think went into business for the first time, founded their company because they love doing double entry bookkeeping. I've yet to meet that person. I'm sure they exist and they're out there. But as people who are very interested in finance and looking at that, I think this is important. So I think it underpins everything that we do. So when we founded Fathom, our founders had a very simple process, and that was to give clarity and confidence to every courageous business owner that was out there. And I think that's still very, very true today. And I think that's ultimately true, is that every business has a courageous person. It has a courageous story behind it. Being a business owner is a very, very lonely place. And often that's forgotten. And we don't set up to build something because, as I say, we love the idea of forecasting and budgets. We want to change things. We want to make this, we want to serve our community. And the idea behind a business, again, depending on where you're scaling, is when we first set up our businesses, the purpose behind that business is to create a customer. But without a customer, we don't exist. We can't pay the bills. As we scale, we may then look at shareholder value and building shareholder value, but fundamentally, we want to start doing that. So I think we have to recognize that when we're building our business and you're building your business, doing something like that is building something remarkable is a team sport, and you really need to have the right people in place, the right processes in place, and the right attitude to achieve this. And I think this is really important, and we have to come back to ultimately, why are you doing this? What's your ultimate vision? What are the values that you have, and what's your purpose? And this is so underpins everything that we do as a business, is the customers we create, the vision that we have, why we're building what we're building. And ultimately, as we grow and as we scale, what we often see is that there are these levels of complexity that come in. Maybe it's the first time we take staff on, maybe it's the first time we apply for funding in the business, we look to get investment into the business. There are these complexities of scale that hits us, and we tail off, we cross those ceilings, we break through those ceilings, and as we scale beyond that, we hit another level of complexity that we push through. And it's being true to those values and being aware of them, and that's why I always think this is so important, is to instill that. It's also important to instill the right systems and process. And I say, forecasting, budgeting, reporting and analysis, in my opinion, shouldn't be something that we just do once. It's something that should be baked in on a regular basis, at least monthly, if not at a very outside quarterly, because a lot can happen in 90 days. And I think the last 2 years has certainly proved that. We've seen lots of businesses, shut down for 3 or 4 months, and the impact that has had through wages. Yes, lots of governments have put funding available to businesses to take advantage of. Many didn't qualify for that. New businesses didn't qualify for that, sadly. So what were the other options around that? And traditional lending wasn't available, but it's now starting to come back into the market. And I think there's lots of options there. When we talk about money, that's vital for us. So how can we capitalize on this? Depending on what business you're in, whether that's a tech business, whether that's a SaaS business like Fathom is, obviously a lot of our income is driven by subscriptions, and that's very much paid on credit and debit cards. But for other businesses, they're not quite as fortunate. So getting money in is absolutely vital. How are our customers paying us? Some businesses don't necessarily understand the difference between budgets and forecasts. The fact that budgets are more around cost control and forecast is telling us when cash is going to be moving in and out through the business, and what shortfalls there are, is a really interesting way of looking at that. But it's also about making sure that we exercise good spend control while we're there. And that's one of the reasons why people use Spendesk is an awful lot, is because of the way it does a lot of that heavy lifting. So we have to exercise good management of expenses, making sure our customers pay us on time. We're seeing rates globally come down slightly, but so we need to work on that. But again, it's not something you can just iterate on once. You've got to keep building on that. We have to set the right level of expectations with our customers about when they pay us. How do we manage late payments, and ultimately, how do we get access to capital? Be that heavy industry capital coming into the business, funding, investment, or just invoice finance and things like that. So there's so much broad spectrum of things we could look at when we think about money and capital coming into a business. On top of that, I think the other thing to consider is, and why I'm so passionate about this, is forecasting isn't just necessarily about suggesting this is what we're planning or anticipating in the future. One of the things that I'm very keen on is building in solid decision making based on data, and that's a topic I'll cover off in a little while. But data in and of itself doesn't mean anything. It has to have context, and we'll explore this later. But I think why I'm so passionate about using data is forecasting is great, but how are we then measuring up to that forecast? How are we working towards that plan, and how are we performing towards that against that initial forecast? And a lot of us will use tools like Excel to do that, and there is nothing wrong with Excel. I just think it has certain limitations when it comes to depreciation. We can put a lot of effort and work into using tools like Excel to model those events out, but very quickly they can depreciate. Values can be coming wrong depending on the complexity of that. So how do we make something complex really simple? And I think that's what we want to do is really ultimately give you a simple process for managing your forecast through that. And a lot of that comes down to the tools that we use. We'll come on to some of the technology, but I think the rise of APIs and how that's worked over the last 10 years has given reason to the ability for us to link disparate systems via APIs that are giving us the benefits at the back end. So when we look at decision making, we just want to start also thinking about leading indicators, KPIs in the business. The more likely we can manage those KPIs, set those KPIs, however many they may be for our business, 1, 3 to 5, it's really useful for us to do that. A lot of businesses are actually setting one North Star metric, and I think it's important to do that. I do have some items to share on that later. So if there's people who are interested in looking at North Star KPIs and how to set them, and maybe some processes around KPIs, I'm more happy to share a PDF document, the report that we put together, talking about how you set those. So I'm more than happy to share that with you as well. So certainly data-driven decisions is one area that we need to think about. And again, think about not just the data, but what are we going to do with that? As I said, we can extract all of this information from these sources, but what insights is it giving us? How are we going to act on that? How are we going to measure that? And ultimately, why are we measuring it? And then I think some people can get caught up in the fuss of measuring KPIs and doing forecasts because they feel they should be doing it, but aren't really clear on the why. And I think that's very important. I think the other thing we need to think about is, as you scale, what are your options for exit and succession planning? So it's not just getting funding, but ultimately as business owners, what is their exit and succession plan? And baking those into the situation as well, and coming up with scenarios. One thing I was talking just before we went on air, and one of the things I'm seeing a huge rise in at the moment, and certainly the last 2 years has been no different around this, but I think it's really brought it to the fore, is the amount of people who are actually now disaster planning, and looking at what can go wrong. Perhaps they were a little bit blasé before COVID. COVID brought very quickly to their attention that the need for them to start thinking about what can happen, what are our worst case scenarios, how does that impact us financially as well as operationally, and how do we model those in as well. So what we're seeing at the moment is not just your kind of best case forecast, we're actually baking in, if you like, a DEFCON 1 through to 5 series of scenarios based on certain events happening. And that's I think the key thing here. None of us have a crystal ball, but we can try to get as close as we can to it so that we can make better decisions, almost to a point of decisions before they happen. We can see the options that are in front of us and choose the best outcome for us. And I think for you as business owners, as for CFOs within those businesses, that's critical for you to make sure that we're putting the best information to our management team, to our investors, to our banks when they're looking at lending, that these are safe decisions. They are calculated, they are thought, considered decisions that we're making as a business. And I think that's really good. We're touching on something here as well around innovation. And obviously machine learning and AI plays a part. And I think this is true. We've never been in such an environment where technology is really pushing us forward. It's leapfrogged us in the way that we can now use this information. And data, as I'm sure many of you are aware and have known, data has now surpassed oil in terms of the best commodity. I'm not here to debate that in terms of GDPR and other data privacy issues, but where we have that data, where we can use that, we can use it in a way that we've never been able to before, and to really model those decisions out. And this is where I think businesses are becoming much more smarter. This is something that we could not do in Excel very easily, but also not only that, not everyone understands the traditional spreadsheet formats of reports. As accountants, as finance people, we get that, but not everybody does. People like to consume data in various different ways. Some people like to consume it on screen. Some people like it in a slightly different table in a chart. Some people want to have something more tangible in their fingers when they're thumbing through it. There are various ways in which we can do that. I think that it presents us with opportunities that we can really leverage. And there's something, I think, I've been sat in board meetings with management teams when we've handed them a report pack, and they've literally touched the document itself that we've handed over. And because it's printed on slightly thicker, glossy paper, there's just that tangibility of something that they think is of great value. Not only have we invested our IP in there, but we've just handed them a document that just feels different. And I've seen others that have just printed off 80 GSM paper from the printer. Yes, it's got the same information on, but when you hand it over, just that touch, those little things mean so much. And we were able to create a huge value proposition just by doing things like that with the clients that we were working with. And I think it's the same for people who work with data, present this information. We've got to think about the people who are consuming this and how they're going to consume it, whether it's on screen, in a document, and ultimately, does it have the data on that they want? And I think that's the key thing as well, is making sure we have robust data, that we're not at the mercy of having cells that can be corrupt because the wrong formula's there. The fact that we're taking this information, and if something changes, if someone decides to change their mind, or the account system, the GL function becomes updated overnight, that those numbers are automatically feeding through. We haven't then got to go in and refresh that. I think the other aspect here, and I think we're certainly seeing this through other applications in the marketplace like Spendesk as well, is it's not just about the general ledger product itself. It's actually about what we call pre-accounting, or the data capture. If you think of expense management, if you think of the way that Spendesk has its ability to capture expense information the same way that Dex does, the same way that Auto Entry does, for example. These are tools that can take receipts, do a lot of that heavy lifting, and then present that into the general ledger. So it is freeing up that time. And I think that's very important, that we recognize that AI and automation really can do a lot of the heavy lifting for us, but some of the analysis needs a little bit more context. And I think there's a danger that we can overplay the role of automation in some of the predictive algorithms that are out there. I just think we need to treat that with a little bit of caution, because again, there could be things like seasonality that the algorithm isn't aware of so much, but we can build that in and bake that in because of that additional context that we as a business owner, we as a finance team can bring to the equation as well. So robust data is the starting point. Without this, and because the clarity of data isn't sufficient, we're going to get garbage in, garbage out. So we have to ensure that. So pre-accounting is probably more important than the general ledger stuff, to be honest, and making sure that we're capturing it. Obviously, when we come to the GL ledger, there's some great cloud-based applications that exist out there now, where they can process large volumes of data. The infrastructure is so much easier. cost effective for us to run. It's distributed access, so we can access it anywhere, anytime. And the API access is second to none, so we can really move away from the traditional desktop environment towards that. It's not locked on a laptop somewhere. It's not locked on a hard drive. It's not on a USB stick. It's in the cloud where we can have the most impact of having that information available to us. Once we bring that in, I think it is a question then of, are we performing analysis? Are we looking at KPIs, or are we looking at forecasting? And I think they all mesh together, because again, it comes back to decisions being made based on data. And I think the beautiful thing around setting KPIs is we can set those lead indicators, whether it's a single North Star metric, whether we're analyzing our reports, our KPIs, our performance against where we think we should be against budget, or indeed forecasting a new hire, a new equipment, a new product or service stream. Where we can forecast the number of people that we need to hire. We need to forecast assets that we need to purchase. Are we taking loans for those assets and putting those into the system? What payment terms are they? How can we service that debt? If we have taken government-backed funding, at what interest rate? When does those payments start? When will they finish? Can we continue to service that debt? What happens if something changes? If our 20% of our customer base suddenly disappear tomorrow, what situation would that leave us in? Can we still, service those debts? The ability to look at each of those together, but in an isolation, and model those out to see the impact of that is crucial. And what we want to see is if we do that, is it going to have a negative or a positive impact / outcome for us as a business? And I think lots of Excel, you can't really see that visually. You see the numbers, but you can't really see that visually. And I think that's where you see now the more robust forecasting applications now starting to come to the fore. It's not just about analysis, though. It's about goal seeking. It's about us asking ourselves, the management team of the business, asking itself some really interesting questions and searching questions. And that's where tools like GoalSeek come into this. As part of our forecast, yes, we can say that this is what we're planning on, but how are we going to increase our profit by 20%? If we took on another 100 customers, what would the net effect of that be for us in terms of MRR? What if we lost 100 customers at the end of the day as a result of that? What would the effect of that churn have on our business? And we can model that out through goal seeking and what if scenarios. And I think that's really powerful for us to be able to do that. And we're not generally going to get that through, you can do it, but you're going to do it in a much more convoluted way through Excel modeling. And I think the ability for that to be dynamic is really important. So think about that. I think it comes back to this: how will insights, not data, be used? And this, when I talk to accountants about this, when I talk to their customers about this, this is really where the power of forecasting, the power of data, the power of KPIs comes in. Because I don't know if you've seen this model before, but this is certainly a model that's been widely distributed. And I think it comes back to what we were talking about before, which is data without nothing is irrelevant. It's just giving you signals. It's giving you data points on a map. We need context. We need to know what's happened. That's going to reveal relationships between bits of data and information that we have, customers, invoices, the products that they buy. We need to give that information meaning so that it becomes knowledge. Now we can start looking what's happened in the past. We can start to reveal patterns around why things have happened. It becomes contextual in a much more synthesized way at that point. And when we have knowledge that we can start building insight into, that's where it becomes wisdom. And that is, we can start to ask what's best for the business. What's going to give us the best outcome? What principles does this apply to us so that we can take that forward? And I think then we're into real decision making area ultimately at the end of the day, because if we have sort of wisdom that's given purpose. Why are we doing this? When do we need to do this by? That gives us action, and ultimately that's the best part of what we're doing. So we may look at forecasting just purely from a financial perspective, but I think ultimately this is about us just making good business decisions. But it's giving us context in which we can do that. It's building us a reason why. It comes back, it ties us back to our path of vision and purpose. And again, it inspires action, but it inspires the right kind of action that goes forward. So don't underplay the importance of how you can use forecasts, models, KPIs, and analysis in your decision-making process. And I think that's often ignored. And it doesn't matter, effectively, it should not matter where your source data is coming from, whether it's coming from, tools and general ledger products like Sage, QuickBooks, Xero, Excel. If you're in Australasia, there's a tool there called MYOB, which is Mind Your Own Business. But essentially the tools that you're using should be able to take that information, that GL data that you're building in there, and transform that into really visual forecasts, reports, dashboards, and scorecards for you. It's about demystifying some of that and taking something that's really complex and turning it into something really, really simple. And I think, for many of you, I'd love to know how you're currently doing your modeling. If you're using Excel, fine, just let me know. But I think one of the things that we often hear is, again, the reasons why Excel is frustrating is because it's cumbersome. It really means that you've got to spend a lot of time up front, whereas we can have, in today's cloud world, forecasts that are up and running very, very quickly, literally within a matter of minutes, once you've connected your data source to that. And that has to be positive. It's the speed of decision making. And I think it also, when we're looking at lending and funding, we want to get decisions quickly. We want to have that information at our fingertips, that we can provide that to our lenders, to our investors, lightning speed, but we can make it look really professional, and ultimately help them make a smart decision to invest in us as a business. And I think that's the most important thing. So for us, it really is, something that sits to accountants. We talk to this about their advisory toolkit, one platform that can allow you to do all of this. And this isn't a sales pitch by any mention of the word, but it's something that we often see coming through, is that they want to have something that gives them really something that's intuitive, that's in clean, and it improves engagement. And I think whether that's an engagement with a client as an accountant, a management team where various members of the team are engaged more internally, so you're actually more engaged with stakeholders, owners of the business, investors, bank managers, that has to be a really positive for us. So I'm coming up on kind of half an hour. I'm just conscious I've been talking for a little while, so I thought I'd just come back and open that up to questions. I don't know if there are any questions that are coming through thus far.
I'd encourage everybody to fire in their questions if they have them. I took down a bunch of notes and I have some questions for you. So I can go first, but please, I'm sure for those in the audience, your questions will be far more interesting. So please do get them in. I had one question that we talked about a lot over the last 18 months and probably more in 2020 with everything that was going on, was how often companies should forecast. Do you recommend a specific cadence?
I think ultimately it's down to the individual business that they're in. I think at least monthly should be the way to go. I think, as I said during the session, I think 90 days at a quarterly is that a lot can happen in 90 days for a business. So I much prefer a faster cadence than that. I think if you're in a fast moving environment, it's not saying that you can't look at. Again, I'll break this down. If you're looking at operational data, if you're looking at subscribers, for example, you probably want to measure that on a daily basis, but you're not going to forecast that daily. You'll probably forecast it monthly. If you're looking at doing a forecast financially, you'll probably reforecast every quarter. But operationally, you'll look at the main reports every month, just to give you that sanity check that you're on the right track and you're hitting all your main KPIs, OKRs. And again, I think that cascades down as well. Is this is what we have as a business. How does that then play into my individual departments and teams and down to individual responsibilities and OKRs? Are my sales team hitting their quotas? That's another level of individuality. But if we're looking to maybe manage someone out of a team, or they're hyper performing, we need to maybe reward or incentivize that a little bit higher. So I would certainly say probably forecast quarterly. It's certainly, we do see a lot of firms, businesses as well, forecasting on a monthly basis because things change. So they just want to stay on top of that. But I think a lot of businesses have put it off because it is such a cumbersome process. And I think if we can the more we can automate that, the better information that we want. And I think it comes back to some of the people who have investors. Investors probably want to see at least quarterly management reports, quarterly forecasts. Some may even want to see some quicker than that, just to give them that reassurance that everything's on track. And I think that's just a smart move to be. I think it comes back to one thing, and that's sound financial stewardship for those businesses.
Very nice, thank you. We have a good question from Nicholas. What do you think are the biggest problems that come with forecasting?
One of the biggest problems I think that come with forecasting, again, if you're looking at Excel, I think it's just some of the models I've seen are very, very complex, multiple page of spreadsheets. For some businesses, they're also having an extra layer of complexity because they could be group companies, so you could have consolidations that you want to bring into that as well. You may have, as I've noticed at the very beginning of the show, you have people in Argentina, Germany, the Netherlands. They could be working you could have multi-currency issues that you need to factor into that as well. So those are probably some of the biggest. If you go to the extreme, that's probably some of the bigger ones, is handling multi-currency consolidated forecasts for a group company. At the very basic level is just understanding maybe somewhere to start, and people start in Excel and they think a budget is a forecast, and it's not. It's something different. And the key thing here is, how do we keep the cash flowing into the business with a forecast? And as in practice, we spend a lot of time talking to small businesses about the difference between budgets and forecasts, and the fact that you could spend £5,000, €5,000 on some equipment that you had 30 days payment terms on, but your customers, you had 60 days payment terms on, therefore you're out of pocket until that money comes in. So that was a lot of the problems for the smaller companies. So just be mindful of that.
Yeah, thank you for that. That's really helpful. A quick one from Eliza. Any plans to integrate other sources like Google BigQuery or Datev in Germany?
So we're driven by demand, and in terms of the integrations that we have, I think the catch-all for us is, if you can't, again, if we look at line of business applications, if you're looking at job management systems, for example, you can generally export a lot of that into a CSV file, and Excel. We can import non-financial metrics generally through Excel. This is just us speaking. This will no doubt be the same for others. We are looking at Google Sheet integration, so we can make a lot of that more dynamic, and that should be within the next kind of 6 months that's available, but also for non-financial information. But the catch-all is if it's not coming in via an API, then we'll look at it through Excel. It also means that as any company, if people have a demand, there's enough demand there for that, we will also look at API connections to the more popular applications that are out there.
Thank you. A bit of a philosophical one from Remy, so I'm excited about it. To what extent is it problematic that forecasts cannot match the reality of the business?
I think that's a great question, and I think it comes back to, it is. I've seen people over-egg forecasts. I've also seen people downplay forecasts, and I think this is just something that, one of the things you want to try and build into a forecast is various scenarios. And there's nothing wrong with building in a best case scenario, a worst case scenario, and having a line of truth if you want to do that. But you have to understand the factors and the drivers that are pushing that forward. It's not just saying, okay, for us as a business, when we talk to some of our clients, it's not just a raw number. What are the drivers influencing that number? Now, that could be something as simple as the number of cups of coffee that you're selling in your coffee store dictates that the average barista will sell X number of coffees a day. Now, if we can tie those two together, and we can push the drivers in place, it's based on sound data. And this, I think, comes back to the data points and the insights that we have. And there could be things like seasonality. So I think forecast, it's an estimate of what we think is going to happen. You're always going to be at the mercy of things that weren't expected. But I think the more we can plan that, the more we can actually start to introduce, I won't say disaster planning, but I think we have to put risk and mitigation planning at the heart of what we do as well. So if COVID, we see the rise in cases of COVID in continental Europe. If we knew 3 months ago that there was a potential that Austria was going to lock down again, what could we do to mitigate that in terms of planning? And how would we run that through as a scenario? We couldn't foresee it, but if that happened, we at least had an option to think about that, and they can at least understand that. Now, that may mean that we have to go back to some of our suppliers and say, hey, sorry, we can't pay you. We're going to have some problems. There could be a shortfall in terms of capital or money in the business. Can we go and get a loan? Can we look at invoice financing? What are several options that we have around that to meet it? We could, if we have enough cash, weather it out, but how much run rate do we then have to be able to see that out, that if we could probably last it for an extended period of 6 months? So there are all those kind of scenarios that you can look at.
And just on that, there was a related concept that we spoke about a lot over the last year, which is as part of forecasting, identifying your key levers, your growth levers, so that if you get into trouble, what are the buttons you should be pushing or easing back off? Yeah,
absolutely.
Exactly.
And I think that comes back to a mixture of looking. This is why I say that it's not just about forecasting. It's about forecasting and analysis and KPIs. What are our leading indicators that are telling us that something is about to happen?
Yeah.
And if we can monitor those in conjunction with our forecast, maybe the KPIs are telling us, actually, we've missed KPIs for 2 months. We need to reassess what our KPIs are. Therefore, it's probably a good opportunity for us to reforecast and remodel that going forward based on a revised forecast. And again, if we're doing that in Excel, we've probably got to strip a hell of a lot of work out of the funnel of the work that we've done. Whereas in most of the cloud-based systems that you're using, it's just a very quick, simple change, and you can reforecast that very quickly. I think Sebastian asked a very simple question. We look about comparing budget versus actuals, and I think he said it seemed very corporate. I absolutely accept that. But what I would say, Sebastian, is it's about getting yourself into a good practice, a good habit of solid financial stewardship. It's being on top of that. And I think it's more likely where investors see that, they're gonna have more trust in you. They're gonna believe in you because you're executing on that in a much more robust way. Shoot me down if I'm wrong on that, but I think investors generally will see that as a much more solid process around your budgets and your forecasting, and more solid on the numbers.
Well, just in the context of that question, do you think that there is sort of a right time for companies to start forecasting, or is the right time day one?
I think it's, again, I talk about this from the point of view from when I spoke to small businesses myself when I was in practice. I've worked with businesses that were conceptual, they hadn't yet started trading. I spoke to business owners that were going for 5 years. So still classing themselves as a startup business. But I also know that the frustrations that they had, because I even came across people who weren't even paying themselves at the end of the day. All this money's coming in, but they weren't sure of how to pay themselves, how to extract money in the most cost-effective way. You're putting all of that effort in and not getting a reward. And when you start to then think about, okay, well, why are you doing this? What's your driver now? Whether that's to put the kids through college, university, whether it's to pay for a holiday, what's the purpose behind this? If you want to change the world, build better hospitals and schools, that's fine. But for a lot of small businesses and startups, they're just wanting to equally match what they were getting as an employee somewhere else, if not more, and build from there. They're looking just to pay the mortgage off, have that nice trip to Disney World, Disneyland, the niceties in life. I would say this is just good practice. It's like having a business plan. There's no point putting a business plan in place just to go to the bank manager to get a startup loan. You want to revisit this on a regular basis. In 2 years, am I still doing this for exactly the same reason that I was when I first set my business up? or has that changed? So it's just course correcting and realignment of taking me on that journey. And I think it's the same for forecasting. If I'm going out, I need to sell my products and services to my customers. How much do I need to know, or is it, am I just kind of guessing and seeing what the wind's bringing? So I would start this. I think it's good habit building from day one. And no one expects you to be an accountant, but I probably would say it wouldn't hurt you as a small business, as a startup, to understand and to give that as good practice. So as you do scale, as you do grow, and you start taking on more people, you employ people, the responsibilities that come with that, you're not just thinking of yourself anymore, you've got them to worry about. You will then start to take on, financial controller, an accountant, maybe a bookkeeper internally. You already have a lot of that great practice there, and it's built in. And I think you're giving yourself the better chance for success. That's what it's all about.
Yeah. And another nice question from Luigi. What are, in your experience, the main pain points in migrating from an Excel forecast model to a tool like Fathom?
I think that to be honest, some of the pain is because it's already done. We expect it just to switch over into, hey, it's there. We've got to do a little bit of remodeling within that. We have to make sure that what we're forecasting matches. We've got to make sure that the model is there. We're using similar formula, or we're calculating the outcomes in the same way. But from Fathom's perspective, we can literally have that up and running in minutes, not necessarily hours or days, to do that.
Wow, that quickly?
Yeah, it's fairly straightforward. If I just very quickly just do this, I'll just do this in terms of context.
Sure.
I'm not going to give a very heavy walkthrough. When we're looking at setup for ourselves, obviously we set up our organization. We can do that. We can also set up the different users within the system as well. So some of the users that you may have may only have access to certain areas, may only have access to certain elements. We can invite customers in here if they need to see any of this as well, or if they need to see an output of a report. So again, if I was an advisor or an accountant, I can do this on behalf of my customers, but I can still give them access. Reverse that. So if I'm a business owner and I want to give my accountant access, I can invite them in to see this as well. So it works kind of both ways.
Or perhaps your investor, you've mentioned.
Or your investor, absolutely. It works always on that. Now, once we set it up, we effectively add our organization. So from here, we can add a company. We can add it from our accounting system. So if we're bringing that in from Excel, we effectively can bring in the data source, so the accounts themselves. The other thing just to notice here is we can also create consolidated groups and benchmark groups. Now, this is really important. As I said, if you are dealing with multi-currency consolidations of groups, they can come in here. Each individual company is imported separately, but then you group them together and produce a consolidated report. And I can also, if I'm working on behalf of a number of clients, or as an investor looking at a number of investment companies I've made or I work with, I can actually rank and compare them side by side. Once you set that up, you effectively go into the settings area. Now, this is where you're bringing in the data. You're saying, okay, this is where this is the account period start date, this is the end date, and I'm going to import that from Xero or QuickBooks or via Excel. This is what I mean by having that automatically update. So it's connecting to your source accounting system, and every 24 hours it's going to automatically refresh you. You haven't got to do this. So it's bringing in almost daily data for you and updating on a daily basis. If you've set budgets up in the system, so you've set your sales budget, your marketing budgets, etc., you can bring the budgets through as well. And if we have any non-financial data sitting in a spreadsheet, we can import that as well. And again, we'll see how KPIs work. Once you do that, you can then set your kind of profile, your default tax rates, depending on where you're located in the world. Your chart of accounts isn't relevant as such. We do bring it in from the accounting system, but what we also allow you to do is to reclassify this. So let's say, for example, I want to create other revenue under another heading. I could simply create another heading called other revenue. And I can manipulate that from here. So it doesn't necessarily do that. That's really useful if you've got group companies with different charts of accounts. that I can then reclassify under the same headings. And that saves me oodles of time to do that. Now, when we look at KPIs, you can, I'm showing KPIs here, but there are a significant number of KPIs that are already preset. And what I can do here is choose the KPI that is relevant to me. And if it is important, I can choose to show that. So if it was operating profit margin, and I can also set the importance of that as well. If I want to create a KPI, this is really useful because I can create my own non-financial KPIs. I can create formula, or if I add it to an existing library, let's say, for example, I'm working with a number of digital agencies as an accountant, I can set up an entire library of KPIs that I want to distribute across any client I choose within that sector. So I can apply that from a library for them. So it's fairly easy for me to do that. I can also set targets. Now, again, this is going to tell me whether I'm on target or not. So if I want to have sales targets, I can use variable targets, or I can use the same target each month. It's fairly easy for me to do that. So again, am I on track? Am I off track? And I can also set alerts in the system as well. So alerts work on the same principle that if I say, hey, I want to turn that on, but I need 100,000 euros of revenue a month. If it drops below that, it'll tell me. So again, it's the system telling us that certain things have or haven't happened, and I can view that. And then we start to get into how we view the analysis of this. And again, this is very, very high level, but immediately you can see here that I'm off target, I'm down. I can start to compare all my on-track KPIs, my off-track KPIs, and any KPIs with alerts. Obviously, I need to refresh my data. But I can now start to look at that visually because, again, it shows me all my KPIs that I've set up, how many are off track, how many are on track. And again, we can drill down to cash flow so I can see what's coming in and out of the business. I can even go into my goal seek because I need to change my net profit or net cash flow from, if I just come down here, operating cash flow, I want to increase it from 1,000 to 10,000. Well, here's some things I can change. Now, if I can increase that or reduce that by 8.6%, it will achieve my goal. But what if I could do that by just by 4%? It will give me the option to see how those things are performing. And again, I can do that on various things here and move those sliders around. And if we go into financials, I still see a traditional financial output for that as well in the traditional tabular format. If I go to forecast very quickly, you'll see here that this is more of a traditional forecast that you would expect to see. So again, very tabular, but again, in here, I can do some very things in terms of my rules. We can base this on a smart prediction. We can do a constant growing rule. We can even set this to a driver that we set, again, going back to my example that we used before of the number of cups of coffee for a barista. I could set the driver up there for that, and I can adjust these accordingly. The key thing for us is we can specify what we call micro forecasts, and what micro forecasts are an independent event that can be linked to the main forecast, but it's its own forecast in its own right. That then allow you to look at a number of things. So for example, I can say here, I want to hire a new member of staff. Their wages are going to cost me £5,000 a month, 5,000 euros. Here's their pension costs, and here's their income. Now, what I have then is the ability to see the effect of that down here using my quick metrics. So if I change that, for example, and I want to edit that rule, and I say, actually, it's not £5,000 a month, it's £2,000 a month. If I apply those changes, you'll notice these numbers spin up at the bottom. So that's in real time. And I can also see that visually. So I can see the impact of that and the severity of that impact before I make that decision. And that's the difference. And again, of course, we can incorporate that into different scenarios as well. So I can incorporate that into a best case scenario, worst case scenario, a pre-COVID, post-COVID, COVID lockdown 2.0, 3.0 scenario, if you want to use those terms, and work through it that way. But very, very simple to take that information through.
While you're in the tool, Nicole has a specific question about all of this. We're a SaaS B2B. Our revenue projections are based on hiring salespeople with an average ramp rate of 6 months, closing X amount of customers at an average ACV. Can those calculations be done in the system, or would that be done in Excel and then imported?
So you could do that through a micro forecast using a driver. So if the average contract value is X, then you could use that using a custom formula and bake that in. Worst case scenario, depending on the complexity without seeing the current model, you could still do that through a spreadsheet and import it in if there's anything more complex than that. But you can, and that's the purpose of having the micro forecast, is when you set that up, you could take on that new hire, for example, here, and then just build that in. So again, create a micro forecast. You could say this was a new sales hire. Just drop that through, give that a category name of SaaS, create that. We're going to hire an employee. If we take them as real salary, let's call it 30,000. We'll drop that to our wages account, pension costs. And then what we can do here is start to use our rules. And then we can start building out some of our drivers here as a percentage of the, if we say they're going to sell ACV, as a percentage of that over 6 months, we'll just ramp that up over the month 1 to 3, 1 to 3 to 6, etc. So fairly easy for us to do that.
Cool.
But
and
happy if you want to send that through to me obviously just drop me an email and we're more than happy to look at that in more depth for you.
And I think we'll finish on another nice broad question, this time from Shalib. What influence do you think AI will have on forecasting? What's it already having, and what might it have in the future?
I think that this is a great question. This is something that kind of keeps me awake at night. I think this is an awesome question. I think, to be honest, the question that I have is, I think AI will have us in a situation where we will use voice more to look at this information and to give us that feedback loop. I think that's really where we will look at this. I think, when you talk to people at Xero and beyond, it's certainly the guy in the US, one of the key people in the US, was talking about how can voice be used to help us be more proactive. How can we search? Could we suddenly say to Alexa, what are my three biggest off-track KPIs this month? And immediately get that feedback loop. So it's reminding us, it's telling us. I think that's really where it's going to go. And I think that's really exciting, is that we can start to use voice to give us some of those feedback loops and alerts through the business. And just telling us, when am I likely, what's my runway? When am I likely to run out of cash? What's my break even at this point? I think those elements for any small business owner, any finance team is critical. I think over the next 5 years, we're going to see a change of how this information is consumed by users.
Do you think there's scope as well for more consolidated data coming in from other, from across companies to sort of tell you that, hey, 50% of other companies are seeing that this trend in their forecast, therefore you should be thinking about this as well?
Absolutely. I think there has to be, for us to make really smart decisions, we have to get external data sources that are sharing this anonymized data so that we can actually rank and benchmark ourselves. One of the things I love to talk about, and again, when I was in practice and we used to talk to business owners, as much as they probably wouldn't admit it, when you start talking to them about their competitors, who's your biggest competitor, what would, how are they performing? They know this information, they have a handle of it, but they want to know, how do I compare with them? Am I in the upper percentile? Am I mid-table? Am I lower percentile? what are they doing? And I think this is where we see a lot of analysis being used around ranking and benchmarking, specifically from our accounting partners that use us with their clients, is they're able to look at that data and look at how businesses are performing and say, okay, in terms of turnover, business A is higher than business B. But in terms of profitability, business B has a better profitability than business A. Why is that?
Mm.
And what lessons can we take from that business and apply to this business here? And I think that's so important, is we want to distribute that data. Data's become democratized. And I think that's the key thing, is how we can employ that for better decision making. So I think the next 5 to 10 years is absolutely, the future's looking bright for that. And I think AI is just going to enhance that as well. And as long as you continue to take the legwork out of a lot of these tasks from different data sources, I think that's a key opportunity for us, is to really connect with multiple data sources and show that.
I think that is a phenomenal place to leave it, with sort of a look to the future. I want to thank you again, Darren. Clearly, judging from the questions and the engagement, this has really, you've struck a chord with the audience, and so I want to thank you again, essentially.
It's been a pleasure. Thank you very much. But if people want to connect with me on Twitter and LinkedIn, I'll be happy to carry this conversation over. But thank you again for your time this evening.
Wonderful. Just a final reminder, as Darren has just said, Nicholas and Robert have said as well, people are keen to connect on LinkedIn. Do that. Also, we have CFO Connect, which is there just for that. So please do join the community if you haven't already. Otherwise, we look forward to seeing you at the next CFO Connect event. I believe our next English event is going to be looking at startup equity and employee ownership. So we hope to see you all there. Have a great afternoon, evening, everybody. Bye.
Thank you. Bye-bye.